Aditya Agarwal and Sandip Sabharwal also joining us on the show. Sandeep, afternoon. Sandeep, how have you been observing the way markets are coming to terms, and as governments is taking shape, market is also taking shape and has come back from the depths of that, kind of a capitulative move coming to terms. What are your observations? Market has moved on from that event now?
Yeah, so I think if someone just slept through the event and then came back to the markets today, they would have seen that nothing much happened. Like some stocks have obviously gone up and down, but then that's part of the market volatility. In my view, it was always the case that if the same government continues irrespective of the majority, like it shouldn't be 272 is the majority and they just have 275. So with independent support, etc., if they are at 300 plus, I think it's safe because the other side then just has 240. So you need to come back, focus on the fundamentals again, and try to look at companies and stocks which are at valuation at which you would like to buy them.
Sandeep, you were pretty vocal about the fact that Tuesday perhaps was a ripe day to actually buy into some of the stocks or add positions as well. So where is it that you found opportunity in Tuesday?
The first focus was to get into the large cap ones which were beaten down. So stocks like L&T, some auto stocks, something like an ICICI, Bharti Airtel, etc., where I think the bounce back could be faster. So some consumer names, etc., like Dabur, etc., we had got in earlier, so that they in any case rallied. So we didn't buy at this point of time, but we are still holding on, expecting a revival in consumer demand due to good monsoons, then ebbing inflation, and hopefully some friendly tax policies going into the budget.
Sandeep, now that that entire fear psychosis of the market, that just because there's not a strong majority coming in, the reform momentum which slowed down is getting reversed. What are your thoughts on the shape of cabinet to come? There is talk that perhaps the government may want to retain strategic areas of focus, kind of ministries, defense, home, finance, etc., external affairs, but may be open on giving away, say, rural development, Ministry of Telecom, all of that. Railways also kind of, since RJD has a history of managing railway portfolio. Any thoughts there?
Yeah, so I think railways is critical because there significant investments were going on and the direction of the current railway minister was very good. If there's a change in health there, I think that could be somewhat disruptive, although directionally the upgradation of the railway stations, upgradation of flights, etc., upgradation of the trains, etc., will continue in my view. But it could slow down. So I think that's one risk. So that's something we need to observe who comes in out there. Defense, obviously, I think the core party BJP should retain, and if that happens, we shouldn't see much disruption. So I think the only key thing is in all the portfolios you talked of is railways, and I think that's something which will need to be keenly watched.
Aditya Agarwal is also with us. Aditya, what are your screen telling you about potential trades in this market?
Good afternoon, Ajay. Thanks for the show. So as far as trades are concerned, obviously I'll go with the long side because clearly markets do seem that they have buying interest and will remain like that markets. So I've got a couple of buy recommendations. One is Cholamandalam Finance for a target of 1450 with a stop loss at 1290 on the downside. I'll go long here. The second is from Granules India. That also looks very interesting to me on the chart setup as we speak. It's trading at day's high. Can be bought at current levels for a target of 495 with a stop loss at 445 on the downside. Overall, if I talk about index, I think especially Nifty will remain range bound. We are done with that volatile phase and up moves and down moves. Unless we see any negative surprise coming ahead, which markets are already not priced in, I don't think so markets will see any more volatile moves anymore. And VIX, I think so, would have also topped out at levels of 32. You will see a gradual recovery in the market and a range-bound move. Maybe 23,000 on the upside will continue to act as a hurdle. On the downside, 22,700, 22,600 will act as a good support area on the markets. So overall, I think Ajay markets will remain range-bound, and within that, you will have pockets continue to outperform few sectors and stocks will continue to outperform. IT is something that I would like to bet big on, apart from the rest of the sectors which are buzzing. Because this is something which has not been spoken about much, and there are a lot of stocks which have been underperforming in this space. So I think today's move that we are seeing in the IT is likely to continue next week as well, and one should clearly focus on some of the large cap and mid cap IT names.
Yeah, absolutely. IT this morning had a bit of a bear versus bull moment because JM Financial at one hand was saying that it's time to go overweight, whereas there were other brokerage houses saying that it's not yet time because Jefferies believes that the margins will be under pressure for the IT companies. But real estate as a pack has been fairly active today, whether it's Century Textiles or a Brigade Enterprises, which is up 10%. Sobha is up 8%. Lodha Enterprises is up. So all of these stocks are actually doing quite well. Kunal, what should one do? Should they use these rise to probably profit book or time to buy still?
From the real estate pack, I think there are still few names which are attractive. Godrej Properties, for example, I think is still good for potentially another 200 to 300 points on the upside. I would look out for, say, 2900, 3000 as a potential target range for Godrej Properties. DLF somehow has, I think, gone through a bit of a correction over the last 2-3 months. The stock, I think, topped out at 930 plus mark. Very recently, the stock had broken below the 800 levels. So I think it's now just about fluctuating just about that 800 mark, still trading marginally above the 200 moving average. But then looking at the relative weakness for the stock in the last 2-3 months, I would expect DLF to probably go into this drag kind of a mode for some more time. So maybe that stock can underperform. Sobha, on the other hand, looks attractive. I think that stock has been trending up quite well over the last 6 to 8 months. Still would, I think looks good for at least another 200 points on the upside. So 2,150 approximately could be a near-term target range. And one of the other mid-cap names, the non-FNO stock from the pack is Anantraj Industries, which I've been bullish on.
Developers, Anantraj Industries, plethora of names from within that realty pack. We're going to take a very quick break on that note. When we come back, we're going to continue our discussion with our chartist as well as Sandip Sabharwal. But here at market veteran Madhusudan Kela today, he's betting big on liquor stocks, and he believes that this particular sector is a long-term structural play on India. Here at why he believes so.
There is no reason why liquor industry will not be as vibrant in India as it is there in China. We have more people as compared with China now, younger population who will look to consume liquor once our per capita income increases. We have seen in lot of other sectors, in lot of other places that this liquor consumption has increased, and hence there has been birth of many valuable companies. I've been invested in Radico for a long time. You have seen what a fabulous journey this company has had in last 17-18 years. They were selling whiskey at 500 rupees a bottle. Now they sold, the same company has sold a whiskey at 5 lakh rupees a bottle. Right? They sold 400 cases few months back at 5 lakh rupees a bottle. And the brand is globally recognized now. If you are able to build a brand, then you make serious money in this sector, and that is what is being proven by Pernod Ricard, by Diageo worldwide. If you look at their brand, they are selling one bottle of 750 grams at 25,000, 30,000, 40,000 rupees.
Well, the point is that the broader market has come back. Look at that. Nifty is in range. Pull the small cap and mid cap. The fear in the market that it's time to get out and all of that appears to be reversing, and that's why 3% higher what the small cap index is at. I want to talk about some of the wires and cable stocks which did not participate when RR Kabel and Polycab of the world. In fact, on valuation front, Finolex Cable, pull up that one. It's a late boomer, but it's doing very well lately, and the commentary from the management suggests that they are aiming at regaining lost ground in the form of margin, etc. Sandeep, any thoughts on Finolex? Do you track this name or this space? Anything which you have in your portfolio?
Yeah, so we don't have any of the wire and cable stocks, but I think Finolex I've tracked, and recently, prior to the results and subsequent to management commentary, obviously it's done very well. So the entire space is doing well in terms of volume growth, and it has actually been leading the entire growth trajectory in the consumer durable side in a way. But I think if you look at valuations overall, most of these stocks now trade between 60 to 80 kind of like 50 to 80 kind of price earning ratio, which I think is excessive for a wire and cable business.
There's also a lot of concern, especially, since the election verdict, about what's going to be the future of PSU companies. Now, on one hand, we all know that that's where the froth was, and some of them were, quoting at peak valuations, which they continue to do so post the recovery that we've seen after Tuesday. While nothing may actually change for the growth path of the companies, do you think they could perhaps go in for either a price-wise or a time-wise correction? And in that lieu, does it really make sense to take some profits off the table if you're not looking at a very long-term horizon, but a short to medium term?
That's for me,
I would
Aisha.
say, yeah.
Sandeep, yes.
Yes, I would say yes to all of the points you made. So nothing much changes for the growth paradigm of these companies. Valuations were excessive, continue to be excessive. Many of the stocks trade at sort of double the valuations at which they should ideally be trading at. So there is a case for both time-wise as well as value-wise correction. And I would think that given the huge over ownership of these stocks at this point of time, where all retail investor portfolios are full of these stocks, so we could see that happening over the next few months.
The other set of stocks which are actually making life highs right now, and this is after that turbulence that we have seen at the start of the week. You have the auto stocks right up there, and auto anchs, Minda Corp, you have Exide Industries, Escorts, TVS Motors, Bajaj Auto. All of these stocks are sitting at life high levels, which they're making right now, an up move of anywhere between 3 to 13% on these names. Aditya, what within this auto sector would you want to buy right now?
To be honest, because there are pockets which have already outperformed, and then there are pockets which have underperformed. So we are seeing a bit of a catch up here, and then especially in the auto ancillary names is where I think you can see a bulk of the catch up. So could be like a name like a Polo Tire, I think so. Makes a good buy at current levels, offers a good risk to reward. You spoke of Uno Minda, that is also looking interesting to me on the setup, though it's up some 13-14%, but I think there is still some room on the upside. It can see levels of 1,050 to about 1,100 on the upside. Talking of Polo tires, it can test levels about 500, about 520. And also look at a two-wheeler space and then commercial space, maybe Aisha Motors, I think so, can be looked at if somebody looking at within the auto space. If I have to pick, I'll probably go for a two-wheeler like a Hero MotoCorp and Aisha Motors. There I see more room on the upside. So Aisha Motor can test levels of 5,000 on the upside. A Hero Moto on the upside can see another 10% pop. So something like a 6,500 is what I'm eyeing on Hero Moto.
Look at how NAM India is locked on an upper circuit. Now, you, well, of course, manage money for a living, and you've been part of the asset management industry for the longest time. How are the business dynamics of asset management industry taking shape? On the one hand, volumes in flows, etc., are strong, but aren't margins coming under pressure, and a lot of investor interest going towards wealth managers, etc.? Sandeep?
So both things are happening, Ajay. So on one side, what we've so since SEBI took the foot off the pedal in terms of restricting the fees of asset managers and continuously trying to reduce fees, charges, etc. I think from that point of time, the asset management stocks actually turned around a year or so back, and after that, they've been moving up sharply. The beauty of the asset management business and any wealth management business, as all of us know, is their costs tend to be more or less free. So incremental assets which you add simply go into your bottom line, and that explains the significant increase in profitability we've seen for many of these companies. So my guess is that these stocks will continue to do reasonably well. Valuations were very cheap 12 to 15 months back, I think, where, if I remember rightly, HDFC AMC bottomed out at 1,500 odd levels. And from there, it's been a sharp up move. So valuations are a bit stretched at this point of time, but the direction of growth is going to remain good. So I think these will be typically those category of stocks where you can see steady earnings unless and until we see a sharp bear market hitting us, where then the cyclicality will come in.
Sandeep, yesterday the view was it's going to be all about rural recovery and FMCG is the space to be. HUL had shot up the maximum we had seen in 4 to 10 years. The valuations were comfortable. Right now itself, a few minutes ago, you're running the lines that the monsoon is progressing well. In fact, in the next 3 to 4 days, it's likely to hit Maharashtra. It's progressing well over Karnataka. Today, you have the opportunity to buy because some of the stocks have cooled off. Would you be a buyer on FMCG and especially staples?
Yes, consumer stocks are underowned at this point of time. They have not given any returns for the last 4-5 years. Leave aside something like a Godrej Consumer or a Tata Consumer, which have been outliers, and some like stocks like Titan and all, which have their own dynamics. But overall, I think on the FMCG staple side, there is opportunity because as volume growth comes back, we will see that they could start surprising on earnings over the next few quarters. And once that happens, the stocks will also move. So because they are so underowned, that's why as ownership increases, we'll see steady up move. So these are stocks which will not give you 40-50% return suddenly, but these are steady return stocks. And at these levels of the market where valuations are not really cheap, they do offer a reasonable amount of comfort.
There's a very important bit of news coming in from New Delhi. And Sandeep, I would urge you to listen to this because we'll need a reaction from you. The fear of the market was that the pace of reforms from here on may slow down, or even select reforms may be backtracked as and when if allies have some problems around it. So the entire steering of reforms from here on, the steering wheel, Mr. Modi was sitting on it up till now. Somebody else may actually start guiding that direction. But now in Modi 3.0, how things are taking shape, my colleague Prakash Pridarshi joins us exclusively with details on what are the early talks which have happened between the allies and Prime Minister Modi recently, especially to do with the vision of the Prime Minister from here on, including the reform direction. Prakash, tell us, very important.
Yeah, the key economic reforms are likely to be dated under the coalition government, as all India allies have extended their support to the BJP and Prime Minister Modi to form the next government. Along with that, India partners have supported PM Modi's vision to make India developed by the year 2047. In addition to that, Telugu Desam Party, which is one of the biggest allies under NDA, is in favor of next generation reforms to create new opportunities for the consumer and the industry. Along with that, what we are also learning from our sources in the power corridors, that the key economic reforms such as amendments in IBC Act, along with that reforms related to capital and digital public infrastructure to taken forward. The ambitious labour reforms, which has already been approved by the parliament, they are yet to be implemented, to be taken forward with slight amendments. Sources are also indicating that the Modi government 3.0 to continue with the increased capital expenditure target to boost economic growth going forward. Along with that, mega rate rationalization under GST, which has already been supported by the state government, will be taken forward without any hurdle. Along with that, government to continue with modest disinvestment target, and the value generation in PSUs will be the focus. The sources are also indicating that the energy transition goals will be taken forward with the pre-decided target, and that is likely to be on top of the agenda of the next government. Last but not the least, the sources are indicating that the manufacturing growth through PLI schemes to be continued, with most sectors on radar. Back to you.
Input coming in, this will clearly calm down a lot of frayed nerves in the market. In fact, earlier in the day, we even spoke to Madhu Kela, a veteran market investor, regarding this, and Madhu also was expressing that allies such as TDP, the biggest ally, Chandrababu Naidu himself is a very reform-oriented man and has displayed it even in his previous version as a chief minister. And it is unlikely that the pedal on reform may be backtracked. And this is exactly what my colleague is bringing in. Let's hear out what Madhu had to say in the morning about it.
That they are not dependent on a particular party to have a simple majority of 272, right? So I get, and plus all the NDA allies have also confirmed their strong support for the formation of the government. So I see really no issue politically for the next 5 years, and I firmly believe Mr. Modi will continue to run this country. So that's the first point, right? The second point, for people like me, is business as usual. Basically, we are back to basics. This couple of days of excitement, volatility is past us. So market is as what it is today. And if you look at the market, they have already crossed. There was hardly 2-3% decline on a closing basis as compared with pre-survey market which was being made. But there was just too much panic which was being made, and more specifically, I think the technical side, because it was all positioned for a different outcome, and specifically the momentum stocks. That's where this couple of days of nervousness was there. But I see from here on, I will reiterate, as I've spoken many times in the past, that this is the place to be in. There is a lot of opportunities here in the next 3, 5, 10-year time frame. This is the time to think of wealth creation rather than income generation, right? The other point which I see, there will be a lot of doubts in people's mind that whether the coalition government will be less effective, whether they will have to dilute their agenda. So the only place where I feel that there could be some dilution in agenda might be social reforms, like what we were talking, one state, one election, common civil code. I don't know how those things pan out. We will know over the next course of next few months how those things pan out. I see no real deviation on economic agenda from a India perspective. If at all, I think it will get even accelerated more. If you look at even a track record of someone like Chandrababu Naidu, he has been absolutely pro-development and he has been absolutely pro-economic growth. So I see no reason why there will be any dilution in the economic agenda of this government, and hence there is no reason to believe that there should be any change in on our stand on the overall India story and the growth prospect of India.
Okay, it's about the India story and the overall growth prospect. And Sandeep, you heard, of course, my colleague Prakash, as well as what Mr. Madhukela had to say. What's your view with respect to this entire conundrum that people are facing right now? Will there be a reset or course correction in NDA 3.0, or is it going to be just further push to what we have seen in the second regime?
It's very important to understand that when people talk of reforms, what reforms are they talking of? What exactly do they mean by reforms? So many of these reforms which they talk of have no financial or economic implications. Most of the financial economic reforms can be easily carried out with a simple majority and do not need any changes to the constitution. So I think this entire assertion about reforms being deferred, etc., is ridiculous. I don't believe that. And I think that the key is to see whether the entire investment cycle which has started on defense, railways, power, etc., which continues, which it should, and what the government does to revive personal consumption, which is the most important facet which is missing in the economic growth today.
Sandeep, always good to have you on the show and get in your thoughts in the markets and, of course, various stocks and sectors. In the meantime, let me get some closing ideas as well from both our experts. Kunal, what's on your list?
So I've outlined Biocon as an interesting bet. The stock breaking past about the 325 major hurdle, and also I think this indicates that the stock has converted itself into more of a monthly breakout from being into a more of a sluggish daily, weekly breakout. So looks very attractive, and the price volume supporting the move for Biocon today.
Right. Aditya, what's on your stock list?
I'll go for a TCS. It looks very strong to me, and it's on the verge of a breakout from a downward sloping trend line. My sense is as the day approaches, it will break out. Look for a target of 4,000 on the upside with the stop loss at 37.50 on the downside. I think this offers a good risk to reward trade as far as IT space is concerned.
Okay, let's head into a very quick break. Just half an hour to go before we wind up for the day. Holding up a good 178 points, up in the green, 22,800 back on the ticker. It's a little choppy, but that's okay. We're still very well in the green, and of course, individual stocks holding out very smartly. Take a break, be right back.
If you like this video, then like, share and subscribe to ET Now.